Welcome to Subramani. I'm going to talk to you about not very Indian term called spring cleaning of your portfolio. Why am I talking about it in January? Because it is in March that the year ends for Indians, financial year, and therefore we have to file our returns for the data from 1st April of say 2022 to March 2023. So whatever you have to do, whether you have to invest in your PPF, whether you have to do a spring cleaning, whether you have to book tax losses, all that is, this is a good period to review it and do it in January, February. You still have time. So first is whatever you have tax losses, etc., book it, and tax loss harvesting, whatever you can do, what is officially doable, do it. Make sure that you do not make speculation loss by doing this. So whatever you have to do, or speculation gain by doing this, so make sure that you do all that. Second, which I would suggest, and is if you have young children, some of your money should be growing in their account. I realize how much of damage people can do by not being able to understand taxation and investing, right? It is a terrific combination to be able to understand these two and implement it. Let's take a simple example. Here is a friend who had about 10-12 crore capital gain based on some business sale. His advisor had then suggested some mutual fund sale, which luckily he called me and said he's suggesting this portfolio changes, should I do it? I just smiled and I said, do you even realize that this 10 crore capital gain has straight away put you on the highest surcharge slab, and if you just wait till April, your income will fall dramatically. So knowing when to book your capital gains for whatever reasons is not something which every advisor will know. An advisor who knows all this is not in the business of being an advisor. So that's the catch which you have to worry about. So if you are a DIY, there is a lot to learn about investing and a lot to learn about taxation, like this example which I gave. Or to say, how many advisors come and tell you that you have to create wealth in the name of your children, simply because when they are 18, it will be tax free in their hands, because the clubbing provision will no longer apply. So if you have a young child, 2 years, 3 years or younger, or even 11-year-old, you should be creating wealth in their name so that they can use it for their education, rather than you creating wealth in your name and paying. Second is deciding which documents to keep, which documents have to be kept in physical form, which have to be kept in electronic form. For example, if you have a house which you have given out on rent and a house in which you are living, and you incur expenses on them, some major repairs, something to be done, obviously simple painting is not something which you want to preserve bills for. But if you are living in a separate house and you added an extra room to it, then you have to keep all those bills for a pretty long period of time, because at the time of selling, you will have to add all that and say, this is my total cost. So you have to understand what is important. If you bought a fridge, you bought a TV, you bought an air conditioner, it doesn't really matter that you keep the bills for very long from a tax point of view. But from a contract, from a service guarantee point of view, you may have to definitely keep the guarantee card, and there it may make sense for you to at least keep electronic copies of those invoices, because if you bought it through anybody, you would have got an electronic invoice also. So deciding what to keep, how long to keep, that's very important. Similarly, if you have sold shares, bought shares, contracts for that are available electronically. If these contracts are available physically, which is today almost unheard of, then you have to keep it, right? You have to keep preserving it for a long period of time till another grandfathering date is allowed. Like for example, if you bought a share in 2019 and you're selling it in 2023, that is 4 years, that is long-term capital gain. You should have both the documents to prove that it was long-term capital gain, just in case some query comes up. Because I see the data which I get, there's a lot of long-term and short-term classification mistakes which happen from the data. I have no clue how, right? So some of these things you have to be careful about. So preserving the documents for a long period of time is important. So knowing which documents to preserve and which are not to be preserved. I mean, fairly obvious. I need not tell you that your passport, PAN card, Aadhaar card and all have to be preserved for life. birth certificate, death certificate, right? Even a death certificate is to be preserved for 10-15 years at least, and after that you may throw it away, right? So if I have an uncle's death certificate or parents' death certificate which is 20 years old, then it is got no legal need to keep. You may still keep just for nostalgic reasons or whatever reasons you want to keep a copy. But you may not need to. But find out what you need to keep, what you ask your chartered accountant or your tax filer, what he is going to keep, what you are going to keep. So deciding on all that and at least knowing about all that is very important. Any credit card bills, maybe you preserve it for 3-4 years, because I've seen income tax queries arising out of credit card bills. Typically a guy earning 40-50 lakhs, typically when you have a credit card bill, you may not preserve it for very long, but the electronic bill should be available for a long period of time. So preserving the credit card bill, preserving all those things is also important. Remember, you need to preserve all this. Like this example which I was giving, a person earning 45-50 lakhs, let's say he spent 2 crores on travel, right? So which means obviously this travel is for the company's sake. Now if the company has given him a credit card, the credit card will still carry his name. So chances are there will be a scrutiny and they'll say, oh, show how you spend 2 crores when you have only 45 lakh income. So he has to be able to maintain a separate account. I always suggest that you maintain a separate credit card and a separate bank account for expenses reimbursement, because if it is a big amount, unnecessarily it should not interfere here. You have to still add that interest to your income, but other than that, don't do any transaction in that. Go and give the bill to your company and ask them to credit it to that account. So you have a salary account from which you are investing, or separate, and a reimbursement expense account separate, because in case there is a query, it becomes easier to handle. So you have to maintain all the records of those credit card bills, being able to mark out and say this was a US trip, this was Singapore trip, this was all that. So maintaining those details are very important. In your personal life, what you do may not be important for a salaried person, right? You're earning 50 lakhs, you pay tax on that, that's done. But this 2 crores, 3 crores, whatever you spend on, and if you take other colleagues and you've booked all of that in your card, you've stayed in expensive hotels, you've entertained people, you paid $800 for a bottle of wine, right? All those things, you want all that preserved, those bills preserved, kept in a separate dabba. Obviously the bills will go off to the company when you're making the claim. So the company will help you. What happens if the company winds up in India and goes off? What happens if the company, it's your ex-company? So remember, you need to preserve all those things for a pretty long period of time, 4-5 years at least, I would think, because you do not know when it can come up for scrutiny, because the amounts involved are large, right? If 4 lakhs is what, if I am filing a return for a 2 crore income and some 3-4 lakhs is in dispute, then even the department may not raise a query. But if I'm filing a return for 50 lakhs and I'm showing 2 crores of expenses, good chance that will come up in scrutiny. So be prepared for it. That's about all. So be ready with all the details for filing your return. Investments, understanding. If you don't understand, get an advisor, get a income chartered accountant who understands investments. That's also not very easy. So understand all that and then do it. This is your spring cleaning. Thank you. I forgot this. During your spring cleaning, also close down some accounts which you don't need. If you have an account which you opened, वो बचपन में खोला हुआ अकाउंट है, ये पूना में नौकरी किया तभी ये बैंक में खोला, नागपुर में नौकरी किया तभी ये बैंक में खोला. So you end up having 5, 6, 7 accounts, right? So you then start closing down. If you have mutual funds where you have very small, like let's say you have a 1 crore portfolio and you have some schemes in which you have 20,000, 25,000. Honestly, it doesn't really matter. If you don't have less than 10 lakhs per folio, it does not matter if when you have a 1 crore portfolio. So anything below that, take a view clearly, decide whether to sell or whatever, sell, redeem, hold, add, merge, whatever. Take those decisions, close things which you do not need. Check whatever you have subscribed to during the COVID times. Netflix, Amazon, Guilty as Charged. I have both of that and I have not watched anything for the last 2 months. Zee or whatever you have subscribed to, find out whether you really need it. again psychology at work, because if I don't have it, what will happen? Nothing will happen. Some other you can use somebody else's Amazon account or Netflix account. So be careful about what you have subscribed. Maybe time to unsubscribe to some of that, right? So do that. Check your credit card score. It's very nice to check and find out the old credit card of yours, 4 years old, 5 years old, it's still showing up. Go and get your credit report rectified. That's a very important thing. Many people don't do it. They think, oh, I've never borrowed, why should I worry? You should worry, because somebody else could be impersonating you and borrowing. So look out for yourself. There's nobody looking out for you. So get your CIBIL report and check out whether it is accurate. If it is not accurate, make sure that you get it done accurately. Thank you.